Welcome to This Explainer. Today, we're going to absolutely demystify the 401k and hand you the exact blueprint to build long-term wealth step by step. We're breaking down one of the single most powerful retirement savings accounts available to American workers today, cutting through all that financial jargon so you can actually take immediate action.
But first, we need to start with a kind of harsh reality. Keeping your money stuffed under a mattress, or honestly even just sitting in a basic checking account, means it's constantly losing value to inflation. In fact, standard inflation can literally cut your purchasing power in half over a 20-year period. As the cost of everyday living goes up, the actual power of your cash goes down. That makes investing not just, a nice idea, it's an absolute necessity if you want to secure your financial future.
So here's our game plan for today. We're covering Meet Your Wealth Building Tool, free money and tax perks. What should you invest in? The magic of compound growth, changing jobs investing, and finally, maximizing your retirement wealth. We've broken this massive topic into really logical, digestible steps.
All right, let's dive right in. Section 1, Meet Your Wealth Building Tool. This is your automated path to retirement.
The best way to think about a 401k is not as the investment itself, but more like a tax-advantaged basket that holds your investments. And the really crucial part here is that this basket is funded completely automatically, straight from your paycheck. This automated deduction is a total game changer because, let's be real, it completely removes the temptation to spend the money before you can save it. You are literally paying your future self first, building this long-term wealth totally in the background of your life.
Moving right along to Section 2, Free Money and Tax Perks. Let's unlock some secrets of the 401k. We're going to explore why this basket is so magical, starting with how it powerfully shields your hard-earned money from taxes.
You basically have two primary choices here. With a traditional 401k, you're making pre-tax contributions. That means you get a tax break right now, the money grows tax-deferred over the years, and you only pay taxes when you finally take it out in retirement. On the flip side, a Roth 401k uses post-tax contributions. So you pay the taxes now, but your money grows completely tax-free and your withdrawals in retirement are tax-free too. It's really just a choice of paying the IRS today or dealing with them decades from now.
But honestly, the tax perks aren't even the best part. Imagine your employer offers to match your contributions up to, say, $3,000. Ignoring this is literally turning down a $3,000 raise. A match from your employer is straight-up free money. If your company offers one, your absolute first financial priority should be contributing enough to snag every single penny of it.
That brings us to Section 3. What should you invest in? Time to build the framework of your portfolio. So, what actually goes inside this 401k basket? Let's tackle what is usually the most intimidating part for people: choosing your actual investments.
When you look inside, you have a bunch of options. Target date funds are incredibly popular because they're fully automated. You just pick the year you plan to retire, and the fund does all the heavy lifting for you. But you can also choose index funds, mutual funds, bond funds, company stock, or stable value funds. The real trick here is balancing risk versus reward. And that balance, it's entirely dependent on how old you are.
Notice how that asset mix looks when you're young. If you're, say, 25 years old, your portfolio might have a super aggressive 90% allocation to stocks and just 10% to bonds. Because you have 30 or 40 years before you retire, you have plenty of time to take on more risk and ride out the market's crazy ups and downs. You want to heavily favor stocks for maximum growth potential over those decades. But fast forward to age 60 and watch how this brilliantly shifts. You transition to a much more conservative pre-retirement allocation, something like 60% stocks and 40% bonds. At this point, you're not just trying to grow your wealth aggressively anymore. Your main focus is on protecting what you've already built, making sure a sudden market crash right before you retire doesn't wipe out decades of hard work. Okay, Section 4, the magic of compound growth. This is exactly why time is your greatest asset, and this is the math that will actually change your life.
When you map this out, the explosion of growth between year 20 and year 30 is just insane. That is compound interest in action. When you invest consistently, your money earns interest. Then, that interest earns its own interest. Over 30 to 40 years, your money literally starts doing the heavy lifting for you, creating true exponential wealth.
And when you're looking at where to put that growing money, the 401k easily outshines standard IRAs, Roth IRAs, and taxable brokerages in a few key areas. Specifically, 401ks have much higher contribution limits, though, you should always double-check the current IRS limits since they do change.
And they offer that vital employer match, which those other accounts just don't have.
Moving to Section 5, Changing Jobs Investing. Think of this as performing maintenance on your wealth. So what actually happens to all this money when you inevitably change jobs mid-career?
Well, before you jump ship to a new company, you absolutely must understand your vesting schedule. Vesting is basically the required timeline that determines when the employer match officially, legally belongs to you. Now, the money you put in, that's always yours. But those employer match dollars might not be fully yours until you've stayed with the company for a certain number of years. If you leave too early, you could literally be leaving thousands of unvested dollars right on the table.
When you do safely make a move, you have 4 main options for your old 401k. You can leave it where it is, roll it into your new employer's plan, roll it over into a personal IRA, or cash it out. But let me be super clear about that last one. Cashing it out early triggers massive taxes and brutal penalties. It effectively destroys your hard work and robs your future self of all that amazing compound growth we just talked about.
Which brings us to our final part, Section 6, Maximizing Your Retirement Wealth, Avoiding Mistakes and Staying the Course. Let's do a rapid-fire checklist to make sure you actually reach that comfortable retirement.
First, avoid these classic beginner traps. Waiting too long to start? You're missing out on decades of compound interest. Ignoring the match? You're literally leaving free money behind. Investing way too conservatively while you're still young? That puts a massive cap on your growth. Panicking and frequently changing your investments? That destroys your returns. Cashing out early triggers those awful penalties. And lastly, paying unnecessary fees will just quietly drain your account over time without you even noticing. So instead of making those mistakes, pull these controllable levers to maximize your wealth. Step 1, automate everything so you don't even have to think about it. Step 2, bump up your savings rate with every single raise. If you make more, save more. Step 3, rebalance your portfolio periodically to maintain your target risk level. And Step 4, stay invested during market downturns. You've got to ignore the short-term noise and stay focused on long-term growth.
Ultimately, the entire core philosophy of the 401k boils down to this. Wealth isn't about perfectly timing the market or somehow guessing which stock is going to explode tomorrow. It's about patience and time in the market. It's about consistency, month after month, year after year, and absolutely maximizing those employer benefits. So the crucial question I want to leave you with today is this. Knowing inflation is quietly draining your uninvested cash, are you going to just let it, or will you take 10 minutes right now to set up your automated wealth machine and permanently alter your financial future? The blueprint is all yours. Now it's time to build.